Please remember, I'm not a financial advisor and I have a bias towards the XX network.
I know not with what weapons World War III will be fought, but World War IV will be fought with sticks and stones.
If we look at what Russia did in the run-up to its further invasion of Ukraine, they began dumping ownership of treasury bonds in 2018. In that year, they plummeted from 96 billion in holdings down to 15 billion, and they also started buying large amounts of gold. China is now, as the ranking member has observed, embarking on its own gold buying spree. I haven't seen the data for May, but April marked the 6th straight month of Chinese expansion in its gold holdings. And I'm not sure I believe the official figures. We have to recall that China is the dominant gold mining player around the world, and half of those gold mining companies are state-owned. So the actual size of China's war chest when it comes to gold reserves may be far higher. In fact, I suspect inevitably far higher than official numbers suggest. Last year, China also started dumping its treasuries. 2022 marked the largest or second largest decrease on record, with a drop of about 174 billion, and China stood at the lowest level since 2010 in terms of its holdings, though this past March they did reverse course. This bears close watching because a sell-off may be a strong indicator of planned aggression.
Russia attacked the Ukraine prior to this war. They attacked them in 2014 and were sanctioned. Russia was positioned economically speaking by dumping their treasuries and stockpiling gold. They knew they would be sanctioned. That was part of their calculus. Today, China is doing the same. China has created their own banking system called SIPs. They've created their own digital currency. They've created the Belt and Road Initiative, which is a debt trap for other nations. China is selling treasuries and buying vast amounts of gold, just like Russia did. They're positioning themselves for harsher sanctions.
The dollar has been mainly the reserve currency because paper dollars, about 70% of them, circulate outside the United States. People have used them as a hedge against their own government. That may flip. All right. And it seems to be more from the, people who like asking, gee, you think the BRICS can really, what's happening here is that, the sanctions against Russia were highly illegal, and they not only did they basically escalate inflation. When you started confiscating the assets of individual people and say, oh, well, you supported Putin. So what is that? Well, I can confiscate all your assets because you voted for Trump?
When a country is sanctioned, we cut them off of the financial system. We threaten them with starvation. I understand the euro-dollar market. I understand the utility of the dollar. However, I understand the will to live more. BRICS nations are strategically positioning themselves to get away from the dollar. This will happen in our lifetime. When 70% of the dollars return home, that's when the loaf of bread becomes $1,000.
Did a tabletop exercise, and in response to sanctions against a Chinese scenario where there will be an invasion of Taiwan, the scenario was that China, the second largest foreign creditor of U.S. Treasuries, would dump that $859 billion in Treasury securities. How are you working with our allies internationally and also the Federal Reserve to deal with a situation where China would dump that volume of Treasury securities overnight?
So we are not engaging in specific exercises to address such a risk, but the United States, the National Security Council, is certainly concerned on an ongoing basis.
Well, Madam Secretary, I would encourage Treasury to make preparations and be on the ready for that scenario and work with.
China is the second largest holder of U.S. Treasuries. If they dumped their position, it would cause economic havoc.
Of course, this bears close watching because a sell-off may be a strong indicator of planned aggression.
Our markets would fall off of a cliff. It would be a black swan event like March 2020. Congressional members are telling Yellen to, quote, be on the ready for that situation. We're in a conflict with China. Economic warfare is common. It's usually the first path or route. China is positioning. The U.S. knows it, and that's why they're evacuating U.S. citizens from Taiwan. Prior to the war, the Ukraine applied to be a NATO member, and that's when Russia attacked. Today, American politicians are promoting that Taiwan is a democracy and separate from China. China has a long history with Taiwan, and China claims that Taiwan is China's, just like Hong Kong. This has the potential to escalate, and if the U.S. response is sanctions, we will see havoc in the markets.
But I think the area where we really need to focus, and where I would agree with you, Chairman, I'm not sure the Treasury has a plan, is how do we deal with the fact that the sheer size of the Chinese economy dwarfs what we've been contending with in the form of Iran, Russia, and so on. And one of the first things the Biden administration did in the wake of Russia's attack was start sanctioning Russian banks and de-SWIFTing them. And that's one thing when you're going after an economy smaller than the size of Texas. It's quite another when you consider that out of the 100 largest banks in the world, China has 20, and all 4 of the top 4 are Chinese banks. And that is why many within the Treasury contended when I was there, and they will contend to this day, that these Chinese banks are simply too big to sanction. I don't agree that we can allow that to stand, but I do believe we have to start taking very swift action to put us in a situation where we could take punitive measures on these banks if necessary. And to that end, it is good that the market is beginning to respond to Chinese bellicose rhetoric. We've seen the Chinese stock market, or the capitalization of Chinese companies come way down. We've also seen a drop in most of the major indexes. We've also seen the 3 biggest banks in the United States start to trim their exposure, but I believe we need to encourage further reduction. And to that end, one of the things we should do is increase the capital requirements on banks that have substantial exposure. We need to ensure that our largest banks can withstand the systemic shocks that would arise from a tit-for-tat with China. We also need to recognize, as the Atlantic Council has pointed out, that China holds over $5 billion in various liabilities to Western investors that they could hold hostage in the event of a sanctions war. And we need to begin educating our pension funds and our investment funds on the substantial risk that they run by leaving those assets in China.
Out of the top 100 banks, China owns 20 of them. Out of the top 4, they own 4. China is integrated into the global economy. Think about everything that's made in China. If the U.S. sanctioned China, there would be major problems. He's suggesting that banks over-collateralize China loans in case this happens. But by doing so, the cost of business with China is going to cost more. Without even an embargo, by just raising the collateral requirements, banks will have to charge more to China. What will China's response be? This is economic war, and the U.S. is on the defense.
And partnership, because the South now has many centers of excellence in technology and capital. We're no longer dependent on the developed North in the previous world order. This is, in a way, a multipolar global order that has emerged. It's not emerging. China is a significant player in it. We like to believe, and I think it's been proven, that the kingdom is a significant part of this multipolar world that has emerged, and we're going to play our part, not only of developing our own economy, but also developing our region and spreading what we have in terms of development opportunities.
In the 1970s, Henry Kissinger set up a deal with the Saudis. All oil would be priced in dollars. The Saudis would then take those dollars and reinvest them into treasury markets. This is how the global reserve currency came about. Saudi Arabia has now partnered with China. They accept yuan for oil and they reinvest yuan into the Chinese economy.
Saudi Arabia is a premium case of this, in which not just this year, but even last year, when they were ignoring Biden's requests to increase oil production to meet U.S. price and targets, and they said, no, we're not going to do that. So we saw again with the Iran-Saudi reconciliation or rapprochement that was brokered by Beijing, and now this latest meeting in which the Saudi officials say, yes, we're not taking sides in this. A perfect example of the fact that Saudi Arabia, like many countries in the region, has adapted to multi-polarity. The question is whether the United States has or not.
Normally, the U.S. would have protected the petrodollar system with brute force. That still may be on the table, who knows? But the fundamentals have changed. We moved from a US dollar polar world into a multipolar world. The XX network has partnered with the Center of Collaborative Economics. CFCE won the first wave and second wave of the XRP Ledger grant, and it's a project focused on charities. They'll be using XX technology such as proxy to protect users. When you send a crypto donation, you automatically get a tax receipt that's in the form of an NFT. We're moving into this dystopian world where you can get penalized just for donating to the wrong cause. And that's why privacy is paramount, and CFCE is taking it seriously by applying XX technology to their tech stack.
You can't demonize the royal family and then go crawling back to them and asking them to increase oil production and then demonize them again and ignore them. And of course, you're going to see the Chinese step into the gap. And that's precisely what they've done in brokering normalization of diplomatic ties between the Saudis and the Iranians. The Chinese have one ambition here, which is to ensure that in the midst of a Taiwan invasion, their access to oil from Saudi Arabia will be unimpeded.
The United States and the actions of our leaders have led countries to move away from the dollar. However, using the yuan has its problems just like the dollar. The yuan has heavy capital controls and currency manipulation. The utility of crypto is this: public trustless ledgers. Ledgers that can't be corrupted. Ledgers that are not run by governments, that don't have biases, that are based on code and math. The multipolar world that's being built will require bridges. That's where crypto fits in. The assets that have gained traction will continue to gain adoption. Protocols with utility. The assets that are gaining adoption are going to continue to gain adoption.
The next Bitcoin or a better Bitcoin. So now I think that the public is beginning to realize that Bitcoin is the next Bitcoin. The next logical step is for Bitcoin to 10x from here and then 10x again. So eventually I have confidence that the crypto exchanges will come around to realizing that Bitcoin really is the dominant asset in this space. And their business models are fine when Bitcoin goes up by a factor of 10. And, we can see that the dominance of Bitcoin in the crypto economy as measured by coin market cap has moved from 40 to 48% this year alone. But I think that as the stable coins and the tokens go away, that long-term dominance is headed for 80%. And I think what you got to remember is the reason that we don't have mega institutional money flowing into this space is confusion and anxiety. When that disappears, you're going to see mega amounts of money flow into space, and the business models will be just fine focused on Bitcoin.
The sovereign wealth funds will have exposure to crypto. When that happens, it's going to change the game. The floodgates will open. The markets will determine the winners. Saylor is right to some degree. Bitcoin is closer to clarity than most crypto. However, I think there will be an array of different coins that make it to the other side. The SEC is attacking crypto because the technology allows wealth to move without dollars. The irony is, if the US embraced crypto, they would have the largest thriving sector in the world.
I think what we're seeing is, China, we're seeing Russia, we're seeing other countries try to create alternative, certainly payments networks. Russia has its own SPFS payment messaging system. It's quite small. It was launched in 2014, not coincidentally, after the initial round of sanctions targeting Russia. In terms of SIPs, China's cross-border payments network, Belarus announced it was having banks join immediately following the 2022 sanctions. And so what I'm saying is there's a pattern, between when the United States mobilizes control over the pipes and the messaging of cross-border payments and adversaries looking for alternatives. Doesn't mean they're using them, but they're getting plugged into the system as at least sort of a rainy day option in the event of a future targeting.
An array of payment systems will need to interoperate. Centralized entities in between just recreate the old paradigm. By bridging the gap between payment systems with open ledgers, a robust industry will form. Value native to the internet will bring opportunities that are unimaginable. Sit tight. Understand the coins in your wallet are more than just coins.
Also would point out that we run a trade deficit with the Chinese. And what that means is, as they export more to us than they import from us, all of that delta between what we buy and versus what they buy goes into that war chest that they're building up. That's their Forex reserves. Under the Biden administration, the amount of that bilateral trade and the deficit has surged yet again from what it was when he took over in 2020. So we do need to look at how we become much more competitive and insist on a more equitable balance of trade.
Fiat always comes to an end, and when it does, there's usually a war. War requires capital. Printing to fund a war would be the final nail in the coffin.
How is US dollars part of the trade between Djibouti and Kenya? Why? And we are saying that today, Afri-Exim Bank have given us a mechanism where traders in our continent can trade in their goods and services, and the Africa Exim Bank will settle payments in local currency.
A state-sponsored Russian hacking group has threatened to take down the SWIFT system targeting European banks. I'm going to leave this thread in the description below, but it's really interesting. It's in regards of Prometheum. Prometheum was given clarity by the SEC. As they were suing Coinbase and Gemini, Prometheum came out of nowhere and received clarity from the SEC. It also looks like Prometheum has went in front of Congress. They've raised funds, but nobody in the crypto world really knows who they are. They do have a token, and it looks like the CCP may be an affiliate of this project. Now, put it all into context, the importance of this technology. It's not strange to think that China is actively in our politics by lobbying through the proper channels. What if they're not going through the proper channels and they're taking shortcuts? Because Prometheum came out of nowhere, and it looks like they have clarity, and they're stating that every layer 1 crypto will be on their platform as a security. So think about that in the context of everything else that I said. It is forbidden to kill. Therefore, all murderers are punished unless they kill in large numbers, and to the sound of trumpets. Thanks everyone, I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon. When you join my Patreon or my Ghost site, I give access to weekly chats. Every Friday we get together and discuss what's going on in the markets and what's going on in the world. It's a group of like-minded investors, and we really have some great discussions.